There is so much bullishness out there. You gotta have both sides. You want the bear case and the bull case. Anyone out there to say, oh, Gareth's predicting a crash, I'm not necessarily predicting a crash. What I am saying to you is this is a time when you see everything going up and you want to FOMO into the market, when you want to be like Bitcoin and be like the individual you probably were at 68, 69,000, sometimes this is a time to sit back and be patient. Because again, instead of buying at 68, 69,000 on Bitcoin, a lot better to buy right now at 29, even if it goes down, much better than 69,000.
Pro trader Gareth Soloway emphasizes the significance of acknowledging both sides of the market sentiment. He advocates exploring both the bear case and the bull case. The U.S. Federal Reserve raised interest rates to a 22-year high on Wednesday as it continued its fight against rising inflation. Bitcoin continued to trade higher by 0.3% for the day at just above $29,300 after the U.S. Federal Reserve raised its Fed funds rate by 25 basis points to a range of 5.25% to 5.50%. The widely anticipated move is having little effect on traditional markets as well, with the major U.S. equity indexes continuing to trade modestly lower. As per Soloway's analysis, the failure of Bitcoin to reclaim the $29,900 to $30,000 range raises some concern. Though it doesn't rule out the possibility of a recovery, it does present a minor challenge in the current scenario. The Fed also stated its readiness to raise rates further if necessary, which limited gains in digital assets. Ethereum also edged higher on Thursday, as bulls pushed the cryptocurrency towards the $1,900 level. Soloway predicts that the crucial support level for Ethereum stands at approximately $1,770, coinciding with Bitcoin's $27,000 level. He said a potential break below this support level might indicate trouble ahead for Ethereum. Silver, like other precious metals, pays a close attention to the actions of the Federal Reserve. Silver price drifted upwards after the Federal Reserve delivered its interest rate decision. The metal jumped to a high of $25, which was higher than this month's low of $22.17. According to Soloway's assessment, a favorable buying opportunity may emerge near $22, contrasting with the current price level. Here are a few glimpses from the discussion that we'd like to show you. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
We have Bitcoin still trading below the range. As long as Bitcoin's below the range, it is vulnerable to a drop. Okay, so again, yes, it's had a couple up days, but remember, these couple up days are coming on the back of the Fed saying what they're saying here and all these other things. So again, the fact that we're not back above 29.9 to 30,000 is a little problematic. Doesn't mean it can't happen, but again, that's a little bit problematic. Watch again, are we creating a bear flag here that could divulge into a bigger move down? Guys, I already showed you this trend line just in the last day or so, but I want to redraw it in. This is my short-term target. This is a major trend line, 27,000 or so right there. And again, not sure why it's not going up on the screen there, but either way, again, that's something that I am watching very, very closely. Going back to over here, I want to show you the Ethereum chart. Okay, so let's go to the Ethereum chart real quick. The Ethereum chart is remaining in this channel, downside vulnerable to this level. This would be the equivalent of that 27,000 level hit on Bitcoin. So if we get down to about 1770 or so, that's your support. That's the level you want to hold on Ethereum. If it breaks below that, trouble brewing. As long as it stays at or above that level, honestly, just like Bitcoin, Bitcoin stays at 27 or above, it's okay. Not that big of a deal. Okay, next up, I want to show you guys this. And again, just real quickly, we'll go to charts of silver. I want to show you silver here, guys. Silver, to me, is getting overbought short term. I'm a little concerned just in the near term with silver because it is an industrial metal. So all of the hope of avoiding a recession can be problematic. And again, we've rallied up. We are near resistance. Eventually, I think it breaks out of this downsloping trend to the upside, but I do think you could be due for a pullback here. I would look at a pullback connecting these lows right here, so right around $22. I'd be a buyer at 22. I'm not a buyer at 24.60 or so.
Economic growth has been surprisingly resilient despite the rate hikes. Second quarter GDP growth is tracking at a 2.4% annualized rate, according to the Atlanta Federal. GDP rose 2% in the first quarter following a large upward revision to initial estimates. Bitcoin casts off a US GDP nothing burger, but dollar index charges to two-week highs in what is traditionally a Bitcoin price headwind. Many economists are still expecting a recession over the next 12 months, but those predictions so far have proved at least premature. U.S. inflation has now declined for 12 straight months and is currently running at an annual rate of 3%, down from over 9% in June last year. The Fed has raised rates from near zero in an attempt to cool the economy and bring prices down. Soloway suggests that if inflation begins to increase, the Federal Reserve may have to contemplate resuming rate hikes.
Yesterday, Fed raises by 25 basis points. 25 basis points, totally expected. What we weren't expecting was a more dovish tone. For instance, Jerome Powell said, and this is something where I saw the dollar decline instantly when he said this, he said, we realize as the Federal Reserve that there's a lag in monetary policy, meaning that they're raising and they've continued to raise, but there's a 6 to 12 month lag before it hits the economy. All right, so right off the bat, that's important to understand. All right, so they're saying that, which means they're going to be more hesitant. It's a hesitation in further rate hikes. Now, if we see inflation start to uptick, they may have to go back to hiking. But right now, to me, that tells me there's a wait-and-see attitude. This morning, we got GDP numbers, 2.4%, better than expected. This economy, folks, while you do have certain economic factors that are weak, the main headline numbers, jobs, as well as GDP, very, very strong. The consumer, while growing more and more in debt, is still spending money hand over fist. The Fed's people said no recession, no recession. And if that's the case, and we're going to start to reaccelerate in the economy, then you have to expect inflation to reaccelerate because demand for commodities is going to rise, as well as if people are doing better, demand for all products are going to rise. So everyone was so happy about the consumer price index last month. Get ready, guys. It's going to start upticking. And the key is going to be is if it upticks, how does the Fed react? Do they have to go back to raising rates? Do they say, hey, we aren't going to cut till 2025, which is kind of what they're saying right now. And by the way, yesterday, Jerome Powell said that. He said, don't expect us to cut till 2025. That's a lot of time where rates remain very, very high. But remember, after yesterday, we're at a 22-year high on interest rates, 22 years.
The U.S. Federal Reserve raised interest rates to a 22-year high on Wednesday as it continued its fight against rising inflation. Bitcoin and Ethereum edged higher on Thursday, but gains were limited by the Fed's readiness to raise rates further if necessary. Silver price drifted upwards after the Federal Reserve delivered its interest rate decision. Economic growth has been surprisingly resilient despite the rate hikes, and U.S. inflation has now declined for 12 straight months. However, Soloway suggests that if inflation begins to increase, the Federal Reserve may have to contemplate resuming rate hikes. The critical factor to observe is the Federal Reserve's response to rising inflation. Will they need to resume rate hikes? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.